What is going on, gang? Ben here, and today we're going to be building upon our previous lessons on order flow with Power of 3 ideology. Now, in our order flow lesson, I mentioned to you that in bullish order flow, we're looking to seek discount arrays and pair them with premium arrays, and vice versa. In bearish conditions, we're looking to pair premium arrays with discount arrays. Now, ICT conveys this through bar candles like this. And I believe this is a bar chart. These candles convey our open, our low, our high, and close. This is a bullish candle, and vice versa for a bearish candle. Now, everyone knows that looks like this in the form of Japanese candlesticks. And we know every single candle on our chart looks like this, or the bearish depiction of it, right? So in some fractal time frame, every single candle that prints, no matter what time frame you're on, has a story like this. Here. Now, we use models like this for me personally. I use it for my daily expectations and my weekly expectations, but you can do this on any time frame because every single candle looks like this Japanese candlestick. Now, for those of you who have been following along to my group, or any other group for that matter, our daily bias and our weekly biases are all going to have, and we're going to use bullish conditions. We expect price to drop below our weekly opening price or our daily opening price, seek some sort of discount, whether it be a PD array, which can be some sort of inefficiency, BISI, SIBI, volume imbalance, void, right? It could be liquidity. It can be some sort of order block, whether it be a breaker block, mitigation block, rejection block. Doesn't matter, right? But smart money is pairing orders below weekly opening price in a discount to premium arrays above daily or weekly opening price at a premium. And this is offsetting, right? For people to be buying, people need to sell to them. Now, we're going to be using, current price as our example. So real quick, price recreate a range, and we all know this now. Price took sell side the last time here, and took buy side the last time here. Price create a short-term shift in structure, taking out this swing low or this swing low. You can take your pick. But short-term shift in market structure with displacement, price reseeks a short-term premium inside of the premium of the larger range in the form of this weekly gap here. Put this on the chart. Here and here, which trades lower, and we seek discount in the form of this old fair value gap, now balanced price range here. So we're going to be zooming in on today's price action, and we can even do this from this time frame. Here you have accumulation, and you can use this entire block or just these candles. price seeks a discount, taking out sell side liquidity. And this pool of sell side liquidity over here finds discount in this fair value gap and distributes. So we're going to take us back here, using this ideology, right? Look at this. And look at this, right? So now, this is your daily candle, here to here. If we zoom in, because I mentioned this concept is fractal, right? Zoom in on hourly candles. And we're going to highlight price action that I was able to get myself involved with today. I'm going to draw your attention to these two. Inefficiencies. So on this time frame, we're simply creating bullish arrays and respecting bullish arrays and continuing to move up. Now, if we zoom in, I'll make this a little cleaner before I keep going in. Here's your good example. So the 12 o'clock 15-minute candle, well, I should do this on the 5-minute. Your 12 o'clock candle opens here. It dips below its opening price, finds discount in the form of this fair value gap, and distributes higher. Same thing over here. Here is your 3 o'clock candle open. It accumulates long orders below its opening price, finding discount, short-term discount, in form of this hourly fair value gap, and displaces higher. Now we can do this on an even lower time frame using our narrative, which inevitably today was bullish, as well as the higher time frame PD arrays. So today I used the 1 minute. And there's multiple examples, and we'll go through both of them. Right? Here's your accumulation. Here's your manipulation. And here's your distribution. Now price does this again and again, creating new short-term discounts and building up other pools of buy side. So here, another accumulation. Equal lows, equal highs. We purge buy side, and this frames a Judas swing, which is another similar concept that ICT uses in this same framework. Whereas this is a straight move out, this is easy. This will fake a lot of traders out, this displacement. But this is a true Judas swing. It takes out buy side first. Finds a short-term discount inside of this newly created hourly for value gap. And then here's your distribution. To above the manipulation. So we've seen the daily candle that printed similar to this first example, or the second example, you take your pick. We zoomed in from the daily to the 15-minute to see that depiction. Then we moved into hourly order flow and saw the same concept used to frame trade ideas on the 1 minute. To follow up this lesson, go look at any higher time frame order flow, whether it be daily order flow or hourly order flow. You can pick your starting point and then look for these signatures in price on the fractal timeframes. So if you're using the daily time frame, I suggest the 15-minute. If you're using the hourly, I suggest the 1 to maybe 5 minute, because we're going to be segueing from this into framing out daily bias. Hope this was helpful, and we will talk soon.